It is 8:16 a.m. Pacific Daylight Time. It is the third day of June 2026, and this is episode 1334 of Bitcoin. And the first thing up for today is going to be the U.S. Treasury sanctioning all of Iran's crypto exchanges, and I'm not sure what they think they're going to do. I mean, I don't know what kind of effect that's going to have on Iran, but they seem to be very concerned that Iran has some capabilities in the crypto markets. Then we're going to talk a little bit about Coinbase, but I'm pretty sure that my favorite story of the day is going to be this George Santos story, because apparently he made a bet on Kalshi as to whether or not he was going to show up for Donald Trump's State of the Union address. Yeah, I'm going to tell you about that and more of all the news that you can use about Bitcoin and macroeconomics from around the world here on the Bitcoin and podcast with your host, me, David Bennett. Charles Schwab is making plans to open up its advisor Bitcoin purchasing. If you don't know what that is, I'll tell you about it. Then the Democrats, Senators Sanders and Warren, want Bitcoin 401k rule pulled. Yeah, they're tying that with Donald Trump's ethics situation, considering that the Trump family is heavily invested and all over the crypto industry. Then Microsoft, I got two stories from them. As if you thought Microsoft couldn't do AI any worse than Copilot, they've got a new agent that they're launching and some kind of new quantum chip design, which I don't buy it. I mean, I'm sure that they probably have a chip design, but there's something about what I'm reading in this story that kind of doesn't make a lot of sense. But U.S. Treasury sanctions are first. They are sanctioning Iran's crypto exchanges in a sweeping economic warfare push. Micah Zimmerman, Bitcoin Magazine, bringing it to you. The U.S. Department of Treasury's Office of Foreign Asset Control designated Nobitex, which is Iran's largest digital asset exchange, and three other Iranian crypto platforms on Tuesday, marking the Trump administration's sharpest blow yet to Tehran's digital financial infrastructure. Nobitex processed more than 50% of all Iranian digital asset inflows in 2025, according to OFAC, and has served as a conduit for payments tied to Iran's Islamic Revolutionary Guard Corps, ransomware operations, and attempts to shield regime wealth during internet blackouts that followed U.S. combat operations in the country. Treasury Secretary Scott Bessent announced the action and pointed to Iran's economic deterioration as confirmation that the administration's maximum pressure strategy is working. Quote, while Iran's economy is in freefall, the regime has chosen to co-opt digital asset technologies for their own corrupt agenda, including evading sanctions and transferring wealth out of the country. The designation extends beyond a single platform. Wallex, the second largest crypto exchange by volume, received 12% of Iranian digital asset inflows in 2025 and also facilitated IRGC-linked transactions. And then there's Bitpin, which captured another 10% of those inflows. Lastly, Razinnex, a Tehran-based exchange founded in 2018, processed more than $2.45 billion in total transactions, including payments for a government-backed Iranian financial institution. The action comes at a moment when the scale of Iran's crypto shadow economy has become a central concern for U.S. national security officials. Iran's broader crypto infrastructure has been estimated at roughly $7.8 billion, and blockchain analytics firm Elliptic has linked Nobitex to a network of wallets and behaviors that's consistent with IRGC financial activity. In April of 2026, Tether froze $344 million held across two wallets attributed to the Central Bank of Iran, wallets with documented ties to the IRGC QODS force and Hezbollah, in what TRM Labs described as the largest on-chain freeze of Iranian sovereign crypto reserves on record. Bessent told Fox Business last month that we've seized approximately $1 billion of Iranian cryptocurrency. What separates Tuesday's actions from prior sanctions, however, is the designation of Nobitex's leadership. OFAC named Amir Hossein Rad, the exchange's chairman, co-founder, and former CEO, for helping reconstitute Nobitex operations after a $90 million hack in June of 2025. Also designated were two co-founders identified as members of the Khazari family, which sits inside Supreme Leader Khamenei's inner circle, as well as the exchange's current CEO, Sayed Al-Khohi. The designations signal a pivot toward holding individuals accountable rather than targeting just the platforms, a strategy that analysts say carries more deterrent weight because it threatens executives with personal asset freezes and secondary sanctions exposure. Treasury invoked two executive orders, a counterterrorism authority, and one that targets persons operating in Iran's financial sector. Both designations carry identical consequences. All U.S. property interests of the named entities and individuals are blocked, and any foreign company or financial institution that continues to do business with them risks exposure to secondary sanctions. The question that compliance professionals across the industry are watching is whether the SDN listings will compel stablecoin issuers and foreign exchanges to cut off Iranian users at scale. OFAC clarified earlier this year that Iranian digital asset exchanges are considered blocked financial institutions regardless of whether they appear on the SDN list, but an explicit SDN designation triggers a secondary sanction against any global counterparty and gives stablecoin issuers direct legal justification for bulk freezing. Treasury has also warned that any person or company facilitating passage payments through the Strait of Hormuz, whether in fiat, digital assets, or informal swaps, also risks sanctions. On May the 27th, 2026, OFAC designated Iran's so-called Persian Gulf Strait Authority an IRGC-linked scheme to extort international shipping. Okay, so that's the end of the article, but I want to go back up here where they were talking about designating particular individuals. It said that OFAC named Amir Hossein Rad, Nobitex's exchange chairman and co-founder, as an individual. But then they go and they say this. Also designated were two co-founders identified as members of the Khazari family, which sits inside former Supreme Leader Khamenei's inner circle. So two co-founders of Nobitex, as far as I can tell in this particular article, Iran's largest cryptocurrency exchange, is sitting right inside the power structure of Iran. I mean, they're not just friends. They're like, you don't get into the inner circle there if you're not like a trusted confidant and somebody that you've been doing business with for years. And just because the Supreme Leader Khamenei has been wiped out does not mean that these two individuals are not still part of that power structure. And they founded a crypto exchange. I find this rather interesting. And this may be why the United States Treasury and OFAC decided to, put a whole bunch of sanctions directly on those individuals as well as their exchanges, because that is really close. That's as close as you're going to get to the internal power structure of Iran, which as I've tried desperately this morning to find out, but there's just radio silence about Iran. At this point, it's just war and rumors of war. In this particular case, it's just rumors of what's going on. I mean, I hear rumors that Iran launched a bunch of missiles last night or early this morning or whatever, however that works, because they're on the other side of the globe. I'm getting no decent information. Is anybody out there getting the kind of information that after you read it or listen to it, you go, okay, now I kind of feel like I know what's going on? Because brother or sister, I'm not there. It doesn't matter. I can listen to NPR, I can listen to CNBC, I can listen to Fox, I can read anything that I can find on the internet. I'm getting bupkis. And it really bugs me that this has been going on this long, and the amount of information was a fire hose at the very beginning of this entire Iranian little trip that we're taking. But now that information is slowed to a trickle, or so it seems for me. So if you've got a place where you're getting good information on this, please, for the love of God, let me know. All right, on to payment giant Stripe and Visa, as well as Mastercard, are said to be among the backers of the soon-to-debut stablecoin platform, because everybody's, still talking about stablecoin. Global payment network Stripe, Visa, and Mastercard are close to introducing a new platform, according to three people familiar with the plans. U.S.-listed cryptocurrency exchange Coinbase is also looking into the possibility of participating in the stablecoin platform, one of the people said. Coinbase, Stripe, and Visa declined to comment. Stablecoins are one of the busiest areas of crypto and have become a focal point for the large card networks and payment players. The total stablecoin market cap is about $325 billion. Stripe acquired stablecoin infrastructure firm Bridge in late 2024 for $1 billion, and Mastercard acquired stablecoin firm BVNK earlier this year. And they said that this week it plans to expand the always-on stablecoin settlement. In April, Visa announced it was expanding a stablecoin settlement pilot to 9 blockchains. Late last year, Coinbase announced a white label stablecoin service, as well as the Coinbase Business Service for stablecoin payments. Since August of 2023, Coinbase and Circle Internet, issuer of the second largest stablecoin, have had a revenue sharing agreement, which comes up for renewal in August of this year, and the token USDC has a market cap of only $76 billion. Under the deal, Coinbase keeps 100% of interest income generated from USDC held on their exchange, while splitting revenue 50-50 for USDC circulating across all off-platform and decentralized finance ecosystems. So Visa, Stripe, possibly Coinbase, and Mastercard are going to throw into a brand new stablecoin platform. And I'm not terribly sure that means that they're going to launch a stablecoin of their own. I think it's more about having an exchange and taking fees, because they'll make a lot, and building the rails for stablecoin transmission across their own networks. I don't expect them to launch a stablecoin of their own. If they do, it's just too late. It just is. Okay, on to this one. I'm excited. George Santos has been referred to the Department of Justice and the CFTC over State of the Union Kalshi trade, Vismaya V out of Decrypt. 2 federal agencies are examining trades the pardoned former Congressman George Santos allegedly placed on prediction market Kalshi, made against his own attendance at President Donald Trump's State of the Union address, while he told the public he planned to show up. You see where this is going. Kalshi caught the activity, suspended his account, and referred the case to the Commodity Futures Trading Commission and the Department of Justice. Santos pocketed tens of thousands of dollars by deceiving bettors about his February plans, according to NPR, which cited 3 people with direct knowledge of the trades who were not authorized to speak publicly. The report comes amid rising scrutiny of prediction markets across the country, with insider trading concerns already leading to criminal charges and calls for tougher oversight. The day before President Trump's State of the Union address, Santos tweeted, quote, "I'm going to be there for the State of the Union in the gallery, guys," end quote. and that boosted the odds that he would, in fact, attend the State of the Union. During the speech, he flipped, quote, "Watching State of the Union from an airport TV was not part of the plan, FML," end quote. As sources told NPR, he had already wagered against his very own appearance. Asked about the probe, Santos told NPR, "Well, that's news to me," and declined to confirm or deny having a Kalshi account, saying, "I'm not saying yes, I'm not saying no." That's a direct quote. George Santos, the CFTC, the DOJ, none of them responded immediately for Decrypt's request for comments. Last month, federal prosecutors charged Google engineer Michelle Spagnuolo with commodities fraud, wire fraud, and money laundering over roughly $2.75 million in polymarket bets that netted about $1.2 million, allegedly placed using confidential internal year-end search data. Let's see if there's anything more about this guy, because they're just going to rehash some of the other issues like James Comer, blah, blah, blah. The allegations against Santos may not fit neatly into traditional insider trading law, Yuri Brisov, partner at Digital and Analog Partners, told Decrypt. Unlike recent prosecutions, Santos allegedly misappropriated nothing, Brisov said, adding instead that the case appears closer to manipulation, move a price with a false signal, and then trade against it. Quote, "Trading on your own conduct is a category that the inherited rulebook never anticipated," Brisov said, noting how existing securities and commodity laws were built around the misuse of confidential information, not wagers tied to a person's own actions. Brisov said prediction markets themselves are not the problem, and that platforms should instead restrict participants who can control outcomes, noting that recent safeguards adopted by Kalshi and Polymarket are, quote, "why Santos was caught," end quote. In February, Kalshi disclosed that it had fined and suspended a Mr. Beast employee and a California political candidate for betting on outcomes that they could influence, referring both cases to the CFTC. Quote, "The lesson here is not that prediction markets are lawless. It is that the platforms are the fastest regulators in the room," Brisov said. The former lawmaker has crossed paths with crypto before. Executives at collapsed exchange FTX, including former co-CEO Ryan Salami, were among the maximum donors to his own 2022 congressional campaign. And 2 years later, the former lawmaker briefly backed a Solana meme coin before abruptly distancing himself from that project. The New York Republican was sworn into Congress in January 2023 after a campaign later found to contain numerous fabrications about his personal and professional history. Federal prosecutors indicted him in May of 2023 on charges including wire fraud, money laundering, and theft from campaign donors. He was expelled from Congress in December of 2023 and later sentenced to more than 7 years in federal prison. Trump commuted Santos's sentence last October, resulting in his release after only 4 months behind bars. Holy shit. This guy wow, that's just not a good look, bro. I'm going to be there. I'm going to be there. Oh, hey, watching the State of the Union on a TV was not part of the plan. Ha, 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 ha. Oh, my, whatever, dude. Whatever. Let's get over to the Circle P. We are open for business. Circle P is where I bring plebs with goods and services to other plebs just like you who want to buy those goods and services. And today, it's Sagebrush Corporate Solutions at sagebrushcs.com. That's sagebrushcs.com. What do they do? Well, everywhere you look, there's another gatekeeper. Banks want more paperwork. Platforms want more data. The compliance machine wants to know everything about everybody. But Bitcoiners already understand the point. Ownership makes sense. Privacy makes sense. Structure makes sense. That's why I tell you about Sagebrush Corporate Solutions in Cheyenne, Wyoming. They help Bitcoiners form and maintain Wyoming companies without turning the process into a giant mess. LLCs, corporations, nonprofits, DAOs, registered agent services, remote online notarization, apostle facilitation, templated formation documents, compliance reminders, the whole shebang. And they are not some national filing factory pretending to just know Wyoming. They are based in Cheyenne, Wyoming. They do one thing well: Wyoming business formation. Wyoming has no state income tax, low annual fees, strong privacy protections, and a legal framework that actually recognizes digital assets. For people building, saving, mining, or operating in Bitcoin, that makes sense. Sagebrush also accepts Bitcoin through their own BTC Pay server, on-chain or Lightning. No bank account required for payment, no middlemen wedged into the middle of it. Registered agent service is $125 a year, and they offer full service formation packages if you want them to handle the moving parts. Go to sagebrushcs.com. That's sagebrushcs.com and use promo code BitcoinAnd for 10% off when you pay in Bitcoin. That's Sagebrush Corporate Solutions. Use the code BitcoinAnd. Charles Schwab has set mid-2027 as the target for advisor Bitcoin and crypto spot trading. Now, if you're confused, don't be. Because Charles Schwab opened up their spot trading for Bitcoin and other cryptocurrencies. They've already done that, but they haven't done it for the advisors. They've just done it for their retail customers. Their advisors is a different thing. So let's get into this one. Micah Zimmerman, Bitcoin Magazine. Charles Schwab, the country's largest custodian for registered investment advisors, is on track to roll out spot cryptocurrency trading, transfers, and custody services for its advisor channel by mid-2027, a move that could reshape how trillions of dollars flow into digital assets through professional wealth management. The disclosure came at Schwab's Advisor Services mid-year media roundtable on May the 28th. The advisor product is distinct from what Schwab already rolled out to retail clients this spring. In April, the bank announced Schwab Crypto, a spot Bitcoin trading service for individuals or individual brokerage account holders, built through Charles Schwab Premier Bank and executed via subcustodian Paxos. That product launched at 75 basis points per trade, triggered debate about whether advisors would find it cost efficient relative to crypto ETFs, and was restricted from New York and Louisiana residents. The 2027 advisor build is a different animal altogether. Registered investment advisors require custody infrastructure, and that means it's not just adding a trading button. The firm needs to wire spot crypto into the same custody rails that its 16,000 plus advisory firms already use for equities and fixed income and other alternatives. Kerr noted that advisors currently route client crypto exposure through exchange-traded products on the platform, but demand for direct spot access has risen sharply. The retail crypto story has been told for years. Apps, wallets, exchanges, ETFs. The advisor channel is where the next phase of institutional adoption plays out. RIAs collectively manage assets that dwarf most retail platforms, and their clients tend to be higher net worth, longer-term holders who want crypto held inside the same account view as their stock and bond portfolios. Schwab's platform custodies roughly $10 trillion in assets across its advisory network, making even a modest allocation shift towards spot crypto a flow event of significant scale. The competitive dynamics is also shifting pretty fast. Fidelity Digital Assets already offers crypto custody and trading solutions for wealth managers, giving it a meaningful head start. Anchorage Digital is pushed into the RIA market through its acquisition of Securitize for Advisors. Coinbase Prime has built institutional infrastructure that Schwab's entry would challenge. Kerr herself pointed to a core friction. Digital assets are not regulated the same way as traditional brokerage and security products. Every step of the custody chain requires legal and compliance review. The bank has to define which digital assets qualify, establish safekeeping standards, and satisfy bank level and broker-dealer level rules simultaneously, given that Charles Schwab Premier Bank serves as the custodial entity for that retail product. The mid-2027 target reflects this reality. It is a committed internal roadmap, not exploratory language, a meaningful distinction from the, quote, monitoring the space posture large banks held for years. CEO Rick Wurster has previously discussed Schwab's appetite for crypto acquisitions if valuations align with strategic goals, and floated the possibility of, you guessed it, a stablecoin, suggesting the 2027 advisor launch sits within a larger digital asset build-out rather than a standalone initiative. And that's the end of the article. Sorry, I had to make a little pause there because I had a street sweeper going on outside. But so the issue really is this. Charles Schwab has already opened up spot Bitcoin trading for retail. That is live and has been live for a few weeks anyway. What they haven't done is allowed their advisors to be able to do the same thing in the name of their own customers. So if you've got a Charles Schwab account and you can log into Charles Schwab and you've got, like, I don't know, some equities in there or whatever, you can spot Bitcoin, you can trade spot Bitcoin if you want right now. What you cannot do is, as some kind of customer of Charles Schwab, is to call your financial advisor and say, hey, Charles Schwab financial advisor guy, I want you to buy, I don't know, $10,000 worth of Bitcoin right now. They can't do it. The advisor cannot execute that trade, and they're not going to be allowed to do so until mid-2027. So just be aware. Meanwhile, let's run the numbers. CNBC futures and commodities. Brent North Sea is up almost 2 points to 97.87. West Texas Intermediate is up 2 1/3 to 95.97. Natural gas is also up today, 1 1/3 to 321 per thousand cubic feet. Gasoline is up 0.6 to 316 a gallon, and Merbon crude is up a point to 97.04. Metals are not doing well. Palladium down 3%. Gold is down 1.2% to 44.65 and 5 dimes. Platinum is down 3%. Silver is down 2 2/3 to 73.57, and copper is down 2 1/3. Ag is all in the red today as well, probably because everybody's terrified of the Strait of Hormuz. Biggest loser today is wheat, 2.16% to the downside, and the only thing in the green is lumber, 1% to the upside. Live cattle down a third, lean hogs up 0.15%, and feeder cattle down almost a half. S&P is down a little bit more than a half. NASDAQ is down a quarter. The Dow is down almost a full point. That roughly translates to about 500 points to the downside. S&P Mini is basically sideways. And then there's Bitcoin, which is at $66,120,000 a coin. That's a $1.32 trillion market cap, and we can only get 14.9 ounces of our favorite shiny metal rock with our one Bitcoin, of which there are 20,038,007.4 of, and average fees per block are rather high today, 0.04 BTC taken in fees on a per block basis. And Mempool is doing its weird thing again. Hold on. I swear, I don't know what's going on with mempool.space, but this is the second time it's hung up on me, so I'm using my own block explorer. High priority transaction is going to get through at 5 sats per VByte. Low priority is going to get you in at 4. Got about 35 blocks carrying 85,000 unconfirmed transactions at this time. Mining, I'm showing 946.1 exahashes per second, so a little bit more of a dip in hash rate. I remain unconcerned because that's more security than we actually ever need. A reminder to go to bitcoinandshow.com. That's bitcoinandshow.com. There you will find brief synopses of the daily podcast plus a link to the actual podcast itself, which doesn't help you because you're already listening to it. But go and send it to somebody else. Send one of the articles to somebody else, or throw it out on Nostr, throw it out on LinkedIn, or wherever it is that you get your social media. I hear that Bitcoin Twitter is quite dead, so that may not do anything for us. And then I've got from Moving Mountains, yesterday's episode of Bitcoin, and I got Progressively Worse with 1333 Sat says, always appreciate the show. Boost this man. Jason High with 250 says, I got in at the top of the post-COVID market, then it crashed, but I didn't sell. I wish I would have bought more at the bottom, but I was still not sure if I had made a huge mistake. I understand the feeling. Nick Dose with 225 says, cheers. And Bitcoin on board with 100 says, everything is great except price. I hear that. All right, that's the weather report. Welcome to part 2 of the news that you can use. Democrats Sanders and Warren push Labor Department to abandon Bitcoin 401k rule. I don't really think this is going to go anywhere. This is out of Bitcoin Magazine. Senators Bernie Sanders and Elizabeth Warren are calling on the Trump administration's Labor Department to scrap a rule that would open America's retirement savings account to Bitcoin and other cryptocurrencies. A move the lawmakers say puts workers' financial futures at risk while lining the pockets of President Trump and his family. So they're linking these two together, guys. In a 14-page letter sent Monday to Acting Labor Secretary Keith Sonderling, Sanders and Warren joined House Education and Workforce Committee ranking member Rep. Bobby Scott to condemn a proposed Department of Labor rule floated back in March. The rule would give 401k plan fiduciaries cover to offer volatile assets so long as fiduciaries can demonstrate they weighed relevant factors before offering the access. Quote, the proposed rule is harmful to American workers and counter to statute, congressional intent, existing regulations, and case law, the letter reads. The proposal stems from an executive order President Trump signed last August, directing the Labor Department to revisit its approach to alternative assets and retirement plans. Under current law, fiduciaries managing 401k plans are held to strict prudence, a requirement rooted in the Employee Retirement Income Security Act of 1974 and reinforced by Supreme Court precedent. The Democrats argue the new rule would flip that standard on its head. Rather than requiring fiduciaries to demonstrate due diligence, the rule would presume it, so long as fiduciary follows the process the rule outlines. That shift, the lawmakers say, conflicts with decades of legal precedent and exposes the estimated $14.2 trillion sitting in American 401k accounts to assets with extreme price swings and limited regulatory oversight. The Financial Industry Regulatory Authority has warned that crypto investments have experienced higher levels of volatility relative to more traditional investment assets, and that the risk of losing all of your investment is significant. The FBI reported over $11 billion in cryptocurrency fraud losses in 2025. The Democratic lawmakers went beyond retirement policy, however, raising pointed conflict of interest concerns. This is the crux of the biscuit, right? It's not the 401k retirement plan that Sanders and Warren is worried about. It's this. Trump's adult sons manage the family's crypto businesses, and the ventures have raised an estimated $5 billion for the Trump family following the September launch of their digital currency. The family's crypto portfolio includes World Liberty Financial's WLFI and USD1 tokens, as well as the official Trump meme coin. Quote, the change to the prudence standard described above expands the opportunities for President Trump and his family to profit at the expense of taxpayers, workers, and retirees, the letter reads. Consumer advocacy group Americans for Financial Reform echoed those concerns. Quote, opening 401k products, or rather 401ks to these products, risks turning workers' retirement savings into a Ponzi-like scheme that throws a lifeline to an industry scrambling for fresh cash, said Oscar Valdez Vieira, a senior policy analyst at the organization. The letter also cited senior poverty statistics. More than 22.8% of seniors in the United States live in poverty, compared with 5.1% in Denmark, 5.8% in France, and 12.6% in Germany, underscoring the stakes for retirees who can't absorb major losses. The Trump administration has framed the rules as an expansion of worker choice. Quote, the department's delay of picking winners and losers are over, acting Labor Secretary Sonderling said in a statement. Quote, our rule clearly spells out that managers must evaluate any and all potential product offerings by following a prudent process. Treasury Secretary Scott Bessent added his support, calling the rule another step in ushering in President Trump's golden age. Okay, so that's the end of the article. Again, just to reiterate, this is just Sanders and Warren trying to to take another road to the whole ethics issue of Trump and crypto. That's what this is. This really doesn't have anything to do with the 401k and their concern for retirees. This is literally to link Trump into a situation where he could be seen by the public to be profiting from retirees. Now, technically, they could be right because Trump is involved heavily into crypto and his family has made $5 billion in the crypto industry since they've launched WLFI and all that shit, World Liberty Foundation or World Liberty Financial. That's all true. But I think that they're kind of taking this approach, and Sanders and Warren, this approach to continuously needle President Trump and the fact that he's kind of in an ethical conundrum, honestly. And I don't think Trump gives a shit, honestly, but other people do. And that's who they're trying to go after. They're trying to use anything that they can get their little red hands on to make Trump look bad. And this is one of them. I mean, it's not going to work as well as the other stuff that they've done because the connections are a little vague. But this just shows me that they're desperately trying to do anything that they can to make this guy look bad. That's Senator Warren and Senator Sanders. They hate Trump. They just do. They're never going to like him, and they're always going to try to kill him. But it is what it is. Hey, listen, I've been thinking. I had to take a break for a little bit to go somewhere, and I was on the road, and I was thinking about this. We got crypto in the dumpster. It's a dumpster fire. We know it, except that, we've been to 60,000 before, and we weren't crying then. But now we're not even quite at 60,000. I haven't looked at the price since I've gotten home, but let's say it's 65,000. And everybody's freaking out in a way that they weren't freaking out before when we plummeted all the way to 60,000. And actually we ended up hitting 58, somewhere in the 58K region, which reactivated the 58K game. I think what's going on this time is that it's very evident that people are doing this to get into the AI play. That DRAM ETF that I tell you about, buying NVIDIA stock, buying Microsoft, they want to buy OpenAI, all that. Yes, that's definitely, but it's been true for a while. I think it's just that we are now, there's no question about it. That is what's going on. And now people are freaking out because, well, we don't know how long this AI bubble is going to last. But it started me thinking about this AI bubble, because it is a bubble. It doesn't mean AI dies. It just means that a lot of the hype is going to deflate. But I don't think that's going to happen for a while. Now, here's what I'm thinking. I've been saying that everything that's not nailed down, people are trying to sell to get cash, to get into AI because of fear of missing out. It's the new trade and all that, right? I saw a map the other day of houses for sale in Florida, and you may have seen this map. It is a fire sale in Florida. There are so many, especially in Tampa, there are so many houses for sale in the state of Florida. It's not even funny. It's like, and all of these homeowners they're listing at relatively market prices. They're starting to come down a little bit, but these houses are still entirely too expensive for what they are. So that got me thinking even more. I go, okay, well, wait a minute. What's going on here? But then I saw another report. The number of home sellers versus home buyers, that ratio is at an all-time high. In the United States, there are 608,000 people trying to sell single-family homes. Not apartments, not commercial. This is just single-family homes. I don't even think that shit includes duplexes. I'm talking single-family homes. 608,000 sellers. And there's like 100 million, there's not even 100 million buyers. The ratio is higher than it's ever been. There's way more people trying to sell their house than there are people trying to purchase a house. And that got me thinking. That and the Florida data got me thinking, what if these people have already gone through the process of going to their bank and trying to apply for a home equity line of credit, which banks are really not wanting to give right now. And I don't blame them. If I was a bank, I wouldn't even offer them. I just wouldn't. And if I did offer them, I would make sure that 1 in 1,000 people actually got that loan. And that son of a bitch better have been taking me out to lunch for the last 20 years. Right? Because I don't want to have nothing to do with this housing market, especially if I'm giving a loan against somebody's house in this housing market, because I might only give them 10% of the house's value, and I'd still be worried that I might not be able to sell that house. And the numbers are supporting that. There are so many people trying to sell their house that it looks like it's going to be a glut, right? So I'm wondering if these people, before they put their houses up for sale, they've already entered into the system to try to get a HELOC so that they could get cash because, hey, not nailed down, and get into this AI thing. And the banks are going, no. So the second step is, okay, well, let's sell the second house. We've got 2 houses. There's a lot of people in the United States that have 2 houses because of investment properties and all that. What if that's what this is? What if these are a bunch of investment properties that are now being sold to get into cash so that they can still make the AI play? I kind of think that is what might be going on. And here's a ramification of that. AI very well may break the housing market wide open. The real estate bubble may deflate to inflate the AI play bubble. And if that's true, if that happens, you could see housing prices crash 30, 40, 50%, maybe even more. Except who's going to buy them? Before these people even sell, they might have to cut their prices 30, 40, 50% before they even get a nibble. What would that do to the housing market? So we are not alone ladies and gentlemen, we are not alone. It's not just Bitcoiners that are feeling the pain of the AI thing. I think the housing market is going to feel it even worse. Now, let's do this one. Georgia targets illegal crypto mining in Mestia crackdown, according to a report. This is out of Cointelegraph. Georgia will reportedly, and this is the country of Georgia, Georgia will reportedly install electricity meters across villages and settlements in Mestia as part of a crackdown on illegal crypto mining that officials say is straining the region's power grid. Vice Prime Minister Mamuka, and I can't pronounce his last name, said on Monday that illegal mining had pushed Mestia's electricity consumption to 133 million kilowatt hours in 2025. That's more than 13 times the level of comparable municipalities. Large-scale illegal mining operations have led to deteriorating energy supply and grid overload, resulting in numerous outages in the region, affecting both residents and tourists. And illegal Bitcoin mining operations in the municipality of Mestia pushed that region's electricity consumption to 100. Well, they already said that. Why are you writing it twice? Anyway, the additional electricity output resulted in financial damages of about 20 to 25 million lari, or $9.4 million US annually. The prime minister or vice prime minister added that metering will be implemented both locally and on a larger scale across villages or settlements, helping identify the exact sources of illegal mining operations. He added that electricity in Zvanti will remain free for every consumer up to a predetermined quality or quantity, and that the new arrangements only serve to crack down on illegal mining operations. So that's all of the article that we need. They're going to mandate and re-meter all these places because that's going to help them track down illegal mining. No, it won't. I mean, you'll may be able to get a hold of this illegal mining, but I guarantee you there's a whole bunch of people around there that are already thinking about how do we get around metering. You know, so don't worry. It's going to happen. And if they think this is bad, wait till they get some AI data centers going in. And speaking of AI, we now turn to Microsoft, who themselves are turning to OpenClaw, and they're going to turn it into an enterprise AI agent with something called Scout. Anyway, Jose Antonio Lanz has this one for Decrypt. Copilot isn't enough. Microsoft wants to build an AI that doesn't wait for you to ask it something. Microsoft Scout, announced at Build 2026 today, connects to your Teams, Messages, Outlook, OneDrive, and SharePoint, then runs in the background, doing all the coordination work you keep forgetting to do, like scheduling meetings across time zones, flagging stalled decisions, blocking calendar time before your deadline ambushes you on a Tuesday. Microsoft calls this new category autopilots. Not agents that you prompt, just things that run in the background. What could possibly go wrong? Now, the Hermes and OpenClaw dudes may be rolling their eyes because, yeah, you've been doing this for a while, but the difference is now who gets it next? Scout lives inside Microsoft 360, and that means it lands on the desks of people who have never heard nor cared about OpenClaw. They haven't opened a terminal in their entire lives. Just want their 2 p.m. meeting prep handled without digging through 3 calendar apps. That's a much larger population than the developers raving about OpenClaw on GitHub. To be fair, Microsoft was early. In February 2023, Youssef Mehdi introduced the Copilot sidebar for Edge, a context-aware assistant sitting alongside your browser, aware of what you were reading. Most people closed it immediately. The idea was right. The timing was too early. Then at Build 2025, GitHub Copilot became a fully autonomous coding agent. And by July, Copilot mode for Edge brought agentic browsing into the new tab experience. Now Scout brings the same logic to the layer where most people actually work. Email, your calendar, meetings, your files rather than just writing code or mere browser tabs. Scout is based on OpenClaw, the agentic AI tool that sparked a new era of AI applications. The project launched in January 2026 as an open source personal agent that you could run locally. It accumulated 180,000 GitHub stars in roughly 3 months and turned its Austrian developer Peter Steinberger into someone both OpenAI and Meta were racing to hire. OpenAI did win that race, by the way. Microsoft, rather than compete with another closed agent framework, built Scout on top of the already solid and known OpenClaw repository and committed to contributing enterprise-grade policy controls back upstream. OpenClaw gets mainstream distribution through Microsoft. Let's say that again. OpenClaw now gets mainstream distribution through Microsoft. And Microsoft gets a shortcut to $1 billion idea, gets the credibility of an open source foundation, and skips the part where it has to explain what an agent runtime is to enterprise customers who just want their meeting prep done. Scout didn't land alone. The WorkIQ APIs go generally available June 16th. That's the organizational intelligence layer that builds a real-time model of how your company actually operates, pulling from email, calendar, meetings, files, and collaboration patterns. According to Microsoft, Fortune 500 organizations average 600 terabytes of this data. Oh, God. The APIs process it 2 times faster than traditional Microsoft 365 APIs. It cuts token usage by 80% in testing, numbers that make a difference to the developers building the next generation of enterprise agents on top of this stack. CEO Satya Nadella opened Build 2026's keynote at Fort Mason Center in San Francisco, telling 2,500 developers that agents are the new operating system for work. That's a direct quote. Windows itself is being repositioned as a runtime for AI agents, with new execution containers and local model support announced alongside Scout. Scout is available now in private preview for a select group of customers and through Microsoft's Frontier program. Access requires Intune policy configuration and opt-in attestation and a GitHub Copilot license to install. That's the end of the article. Let's go back up here to this part. The Work IQ APIs go generally available June 16th. That's the organizational intelligence layer that builds a real-time model of how your company actually operates and pulls from collaboration patterns. Who do you email at work? Who emails you? What's the content of that email? How often do you guys interact with each other? You know? What files do you share? What meetings do you both attend? Do you see where this is going? That's where the collaboration patterns come into play. It's going to be able to develop pattern. It already has, the AIs are great at pattern recognition. And if you work at a company, there are patterns. Whether they're yours or somebody else's, even if you don't know of that pattern, those patterns exist. And this thing is going to be able to pull all that out. What kind of intelligence would you be able to leverage? And I'm not just talking about Microsoft. What other tools are going to be available for mid-level and high-level managers? Who's talking to who? How much time do they do this? At this point, this goes back to my whole theory of efficiency, and that you can actually be too efficient to the point where if you're so efficient, then you get a situation where now your manager starts coming to you saying, why do you spend so much time with Betsy on email and sharing files? Yes, I know that you're collaborating on a couple of projects, but that's a lot of time. Well, maybe it took that much time to do the work that was being done in an efficient manner that is now being held up because a manager has been told that a pattern has developed between you and Betsy. This is not good. This is just not good, man. Oh God. Self-employment just looks better and better, even though it's a slog. It really is. But this kind of shit, I don't know, man. I don't know. There's something about this that does not sit well with me as far as the future of work, and what kinds of work, and how do you go to work for a company like this that would use these tools in fashions that were probably never even dreamt of by the people the developers that actually produced it. It's the knock-on effects that we can't see that I'm concerned about, because I can't see them. But I can see this. Microsoft reveals a 1,000x more reliable quantum chip as Bitcoin threat draws nearer. I'm going to say this once right here at the head. I was unaware that Microsoft manufactured chips. That's my first problem. Jason Nelson from Decrypt. Artificial intelligence is helping accelerate quantum computing breakthroughs as researchers race to build machines that could one day challenge the cryptography securing Bitcoin and much of the modern internet. During its annual Build conference on Tuesday, Microsoft unveiled Majorana 2, a new topological quantum chip that it says is 1,000 times more reliable than its predecessor. Microsoft said that the chip achieves average qubit lifetimes of 20 seconds, with some lasting as long as 1 minute. In a blog post following the announcement, Microsoft said its Microsoft Discovery platform and agentic AI tools helped researchers analyze decades of quantum research, identify promising materials, automate measurements, optimize fabrication processes, and uncover manufacturing flaws that improved qubit reliability. Quote, by applying recent advances in agentic AI specifically designed to speed the scientific process and accelerate collaboration, Microsoft's quantum team is overcoming key barriers in reliability, speed, and size that have limited the application of quantum computing to real-life scenarios, end quote. Majorana 2 builds on Microsoft's Majorana 1 chip by replacing its aluminum-based topological superconductor with a lead-based design that better protects qubits from interference, a change Microsoft said led to substantial improvements in reliability and speed. Coupled with its compact qubit design, the company said it's bringing scalable quantum computing closer to a reality, something that it now expects to achieve by the year 2029. We need to make improvements each year that will get us closer to delivering a computer that we believe will have massive commercial and societal value. We've got to keep marching to that roadmap to accomplish that. But where are we relative to last year? We're 1,000 times better, end quote, said Microsoft technical fellow Chetan Nayak. To help researchers across multiple countries and disciplines navigate the project's growing body of knowledge, Microsoft's quantum team developed an AI agent that organizes, analyzes, and surfaces information from across the program. That sounds very much like the story I just read to you. Quote, using agentic AI to automate the measurements was a game changer. It goes through some math and starts saying, hey, where do I find the lowest point where everything sort of works? And it can do all these voltage adjustments in parallel, which a human cannot do. The way our minds work, we are just more linear, end quote, said Vice President for Quantum at Microsoft, Zulfi Alam. The announcement comes amid ongoing concern over Q Day. Yeah, you know what? I'm not even going to worry about that. We know what Q Day is. So the whole thing here is that Microsoft, who can barely build a functional operating system and has completely polluted their operating system ecosystem with everything from Clippy, the helpful paperclip back in the 90s, all the way to an AI that sits at the corporate level and figures out who you're talking to in that company and outside the company. It's just not good. This is just not healthy for humanity. You may disagree with me, and that's okay. That's completely fine. But there is something terribly wrong about the direction that we're going. And I'd almost rather live in a monastery or with the Amish. I might have to write a book called Becoming Amish, because this shit's just bullshit. It's just all crap. But it is what it is. That is the end of the show. I got nothing more for you. I hope you did enjoy the show. Please donate to the show if you can. If not, 4-star review or a 5-star review on Apple Podcasts would be great. And I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.